Yeah.
You can start with a disclaimer if you want. I'll be there by the time you're done.
Okay. Sounds good. All right, folks. Thanks for coming to FNL's opening bell sequence, where we're OODA Loop our charts, starting with our longer term charts and then going to our execution charts. So our goal here is not to predict where the market's going to go, but to have a plan for when it goes there. Just please remember that trading futures or any other financial product involves risk, and only risk capital should be used. FNL, Futures Networks Live, is not a trade. We're not trade callers. What we do is share and collaborate to make decisions, and our members help us with those decisions. So, we don't have a trade caller, but we will share and collaborate and come up with some of the same decisions. So no representation is being made that any information you receive will or is likely to achieve profits or losses similar to those discussed in this service. Past performance of any trading system or methodology is not necessarily indicative of future results. Although you do need to build a track record, and a track record can give you an idea of what may happen in the future based on consistency. So our goal here is to make consistent decisions that are profitable. So we'll get going here in a couple minutes. We'll start with our 5-minute chart, just do a brief overview, and then we'll go to our weekly, daily, 240, 4-hour, our hour chart, our 15-minute chart, and then finally end up at our 5-minute chart. While we may or may not take a trade at opening bell, what we will do is go through our opening range trade that we've been working on. It's a pretty fun trade to where we take the first 30 seconds of the opening range. First 30 seconds, the market's open, and then we look to take a trade off of that. So it's a pretty fun trade. And last week we had 3 days where, where we did not get chopped up too bad, where the price is going in and out of the opening range. Last week was pretty neat. 3 of those days, I think we got chopped up maybe once, and of those 3 days, and then it took off. So we'll see what happens today. Chatter on the streets is that we could be in for a down day, but who knows? Hard to say. We'll put together a plan, and if the price goes up, we'll have a plan. If the price goes down, we'll have a plan, and we'll set our chop zone. Our chop zone is where we don't want to trade. We want to just stay out and let the market tell us what to do. So if anybody has any questions real quick before we get going, go ahead. Don't be shy. Morning, Bones.
You mentioned how past performance is not an indication of future trading, live trading results. But you also mentioned a track record, and I'd like to say that a lack of past performance is probably a better indication of what's going to happen to your live results if you don't.
100%. I agree. That's why we do need to have a track record. It gives us more confidence. Trading is all about confidence. And while we cannot rely specifically on past performance, we can't use that in our marketing. We can't use that in our I don't know what you want to call it. We can't say, hey, look, if you do this, you're going to make money. We cannot say that. Okay. Your track record will tell you whether you're going to be consistent and make money or not. If you can consistently make decisions that are repeatable, then your likelihood of making money goes up. Let's put it that way. If you don't build a track record and you click buttons, the likelihood of you not making money goes up as well. So let's just say a track record. If you have a track record, the chances of you doing well in trading are substantially higher than if you didn't have one. Let's put it that way. And we got folks entering the room now. So
good morning. Good morning.
Hey, good morning, Randy.
How's it going?
Good. How are you this morning?
Well, kind of refreshed after a couple of days off.
There you go.
Kind of getting out of the usual, everything has to be moving.
I hear you.
Yeah. Kind of choppy market this morning, huh?
A little bit. We are making lower lows, but it's pretty pretty down last night. So,
yeah. I'm seeing things. It's not as clean as I like to see it. So
Yeah.
yeah, I agree. Yes, it's down, but it's trying to go up. So kind of makes it choppy, and those levels that you like to see it hit cleanly are being chopped through.
Yep. So, all right, Travis, you ready, bud? Went through the disclaimer.
Yeah, let's do it.
All right, let's start with a little brief overview of our 5-minute chart, and then we'll head over to the weekly and the daily and go through all the time frames. So I heard your analysis, and folks, if you log in early, Travis does a great job of kind of going through the night and going through where we're currently at. It takes a force trade. So I'd highly recommend jumping on early if you have that opportunity. That's at 8 o'clock East Coast time.
I've actually moved that force trade to 1:30 p.m. because the old one was 7:45, right? And now the session starts at 8. So instead of extending it later, I figured we'd just do it at 1:30 in the afternoon.
Okay.
I wanted to we might can still do both, but my goal is to get more people thinking on the mic, kind of talking through their own ideas, and a force trade's a great way to do that. So I figured we'd do that in the afternoon with a lot more people on, instead of first thing in the morning say, hey man, you want to think before you drink your coffee? And most people will say no.
All right. Myself included. These OODA looping the charts really helps me get in the right mind frame. So I don't just sit down on my charts and start clicking buttons. So I think that it really helps me a lot. So, all right, 5-minute chart. What are we seeing?
Well, our downtrend, borderline picture perfect. I mean, we've got a pretty good lightning bolt pattern making lows and lower highs on the way down overnight. Bar a couple, that's a pretty good downtrend. All our EMAs are in order 289. I don't know, I'm going off. 289, 21, and 10, all in order on the way down. We use the 89 and 21 instead of the 90 and 20. They are very similar, almost identical. Just the 89 and 21 are Fibonacci levels, and we've adopted them within FNL. So basically the same if you're out there on a 90 or a 20 EMA. Literally the only difference is the first candle in that sequence, and because it's weighted towards current price action, it makes almost no difference at the time. So
yep, everything's pointed down right now. Looks like we equaled a low here. We did not make a lower low on this new move down, so we might see this as being a little bit of a level. I guess you could say we closed a point lower on this most recent price action.
Well, no, we really didn't. I see what you're saying.
We closed a point lower. Yeah, in terms of the bodies of the candles, close a point lower than the bodies previous.
Oh, I see what you're saying. Yeah, because a lot of times I would take that first area and just draw the bodies to wick, say that's my support level, and you can see how we've really just tried to turn around in that and push back. So
yeah, no, I agree.
I agree with you. Strong floor down there.
Yep. So we got to kind of take a look at that. Keep that in the back of our mind that we may have a floor here that may take a little bit to get through, and it might take opening bell to push us through that. So. We'll see what happens, but yeah, I mean, definitely coming down, no doubt about that. So let's head over to the weekly, take a look at the weekly and see where we're at. We had 7 or 8 weeks in a row of down. Then we had that big green move last week that recovered 38% of that move down, which we had talked about the price getting up to that level.
Right.
Sure enough, there it did.
One thing to think about, I kind of talked about this morning, is that downtrend is almost unsustainable in terms of how fast it's going. So just because we have this big green candle doesn't mean the downtrend's over. In a sense, it could be a needed retracement that really only went to 382 of the whole move. So there's no reason to discount all this down pressure and say, oh, we're going back up now, because that's a needed retracement. Now, could we go back up? Absolutely. I'm not trying to predict the future as much as say, if your bias said we had to go back up now, I would worry about you as a trader today, because there could definitely be a very good downtrend out of this turnaround. Really, we'll see that on the daily. So,
yep.
Daily?
Yep. Let's go to the daily.
Let's do it. So I've got a lot of different levels. I want to start spreading them out. But the daily, what I was just kind of mentioning is how this was yesterday. We did have a much lighter day as far as volume because the market was closed for the Americans. It was, as opposed to 1 million or 1.5 million, it was roughly like 200,000 or a little under. So about a fifth, a sixth of the regular volume. but still a little bit of indecision on the top, showing rejection, and a longer term turnaround. If this is a 5-minute or an execution chart, and I shrink this down, we have a 382 retracement and a perfect turnaround. So pretty good poise to see a down move today. Now there was a support level on the way up as a channel. If we break that, that's where I don't know what the headroom is. So that 4100 mark is going to be big to me if we get down to it. That's going to be the first place that I look at and really think what's going to happen between 3090 and 4100. 3090 was about the bottom of that box, and that box again was bodies to wicks in the recent area.
We talked about 4,100 on last week as well on Friday. That if we got above 4,100, look out, this could really take off. And sure enough, it did. We took it, made another 70, 80 points off it, or 70 points. So we got to that 4,100. Didn't really even pause that much around it, maybe a tiny bit, but took off. So we might see that on the way down again, that we may pause at 4,100. And if we get below it, well, we might be in for a move back down and maybe even recover most of that green candle there from Friday. So very well could.
240?
Yeah, what about going up? What if the price does want to go up? What price might we look for it to get above before we really start thinking, okay, we're probably back up in an uptrend again?
4,200.
4,200.
Right where we rejected off of overnight. It's the top of the turnaround.
So that's 70 points about from where we're at right now, 65 points. So we have to think, and as we go to our shorter term charts, we'll see levels that we need to get by before we really start thinking that need to start looking long. Because right now it's looking short to me. It looks short. It looks like a great turnaround there at the EMA for a short here. So, okay, let's go. 240, 4-hour chart. And hopefully folks are following along on their charts too. So if Travis's charts might seem a little, has a lot of stuff on them, well, you should be able to look at your charts and say, okay, I see what he's seeing. What do we see here?
A lot of up over the last few days. I mean, that's pretty much last week right there, showing us how much green's there. And if we shrink it, we realize that was our first real retracement. Same thing the daily showed. First good retracement in a while.
So now, being a contrarian, we've been talking down a little bit. Could this possibly be a retracement on another move up to make a higher high? Yeah. I mean, it could. That's why we have to kind of wait and let the price action tell us what it wants to do. Because here, this looks like
the start of an up.
Start could be, yeah. I mean, we have a little pause here, and a move up, and a pullback, and it could be a start of a move up. Very well could be. So we have to kind of let the price action tell us what it wants to do this morning, and not just assume the price is going to go up or down. I think it's going to be important to just kind of wait, see what happens. Yeah, 4,200 though, boy, we get above that, we've definitely had some room up, don't we? Probably to 4,300, at least to 4,250.
Yeah, can I mention a pattern I see on this, Rob?
Yeah, you bet.
So you notice we've been above the 10 on the 4-hour for a while. We finally came down, closed right at it, crossed under it. Now we're going to test the 20, and that's really kind of the line in the sand. I see a lot in patterns like this. Either it respects the 20 and then goes back up at least to the 10, and we see what it does there for it continuing on up, or it crosses the 20 and starts breaking the other ones below. And Travis talks about that all the time, how when it starts breaking them in order.
Yeah, using those EMAs, starts crossing those EMAs and gaining strength as it crosses those EMAs in whatever direction. It's either using them as support or it's going through them, crossing them. And you can see here on Travis's, here's the first one. If we go down, let's get through that. Well, now we've got a second one there, right, to get below. And a lot of times it does gain strength as it crosses those. You can see here how it did the same thing, used it as support, then it gained strength as we went through the EMA.
And the 50 and the 89 are touching. So we've lost some momentum to the upside.
Yeah. Yep. What do you think, Travis?
Not as sold one direction or the other from this chart. I have to keep in mind it's the deep retracement from the long down move, and the short term shows me a retracement to go up. So I'm pretty much on your side of just don't have a bias. Let the price action show me on an execution chart right now. We're at a key level. I mean, it's really at a point that if we head up, it looks like we're in an uptrend. But I know if we head down, I like that a little more because we're already under the EMAs on our 5 minute. So we're already kind of in that downtrend on the 5 minute. And there's a lot of headroom. That is one thing. If this downtrend continues, our headroom isn't just the next candle. I mean, really, the bottom of the move is what, 38.50? So it's not unlikely to see a pretty big down move today. I can't get sold on it again and just extend every trade I get into and have all of my gains down at the bottom because it's just unreasonable. But overall, wouldn't be surprising to see a pretty big down move.
Yeah, on this 4-hour chart, the next move down would probably be right to, if it does get below the EMA, right, the 21, our next big move would be down to the 89, which we have a level right there, where the price kind of stalled out. So that would be a likely move. Likely move to the top side would be the top here, 4,200. That would be a likely
really
move.
Every 50.
Yeah, it's kind of sets up really nicely, doesn't it, for every
4,100, 40.50 on the bottom side and 4,200 on the top side.
Yeah, we don't see that all the time, but today it kind of sets up nicely for that on the 4-hour chart. So right on. Let's go take a look at the hour chart.
Very similar.
Very similar. Yep. We can see here's that little pause area that we talked about around 40.50. The move up, right? Oops. The move up. Yeah, that's all right. The move up. Here's our pullback. So if this price does want to go up, wouldn't shock me at all in this chart, in this hour chart. Would not also shock me to see it come back down here. And I know it's like, well, yeah, Rob, it could do either. Well, yeah, it could. But that's why we really want to wait and let the price tell us what it wants to do this morning, because I'm not really sure what the price, I'm not really confident in either direction right now. I mean, we have been coming down pretty good, haven't we?
I just keep it good.
No, I say that's usually what happens when we have such a strong move up. What happens? Well, price likes to go back to where it's come from. So,
and that was part of my thoughts from the longer term, was that we had 7 down weeks in a row. And last week was the first green, and it was a big green. You could even see the same thing on the daily. So we've just been down, 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 and then pushed up really hard. If that market's a big rubber band, we're kind of due to push back down, even if it's not a downtrend.
Yeah.
So, 15 minute?
Yep. Let's go to 15.
Now we're back almost in uptrend territory on the 15 until the last overnight.
Yeah, until we hit our high at
just short of 4,200.
Yep. So it has been coming down pretty steadily since actually Monday's price action, not the U.S. market, but right since 6 o'clock here. Been coming down pretty where our top was on the 30th at 6.
Yeah.
So I would say now that we really need to get out of this area. We need to push out of this area right here. So if we can get above here, that's my first area to get above. If we get above here, right, 41, whatever that is, 65 or so. Now we might be looking to get, and again, I like to draw these on my 15-minute chart, these little levels to get above. Once we get above those, now I have more confidence to keep going long. But again, if we drop below where we're currently at, it's kind of the same situation we had last night, right? To where if we got below some certain areas, look out, we could have seen a nice drop, and we did have that. So I would say our chop zone is kind of right where we're at right now. We're in the middle of our chop zone, right in the middle of a level you have too, this level here.
Let me zoom in a little bit so we can see that. Yep. All right. Perfect. Okay. Yep. I know there's somebody out there with a magnifying glass or on their phone trying to zoom in the screen, just like, I can't see it. I used to feel like that sometimes when I was on my phone trying to watch a session. I'm like,
Yeah.
using your fingers like zoom, zoom, zoom.
Yeah.
Like,
Yeah, here's a little better. So there's our bottom, obviously. If we get below that, boy, there's nothing really down here, is there? And then moving up, we might see a little bit of chopping, but here would probably be where support and resistance. Well, there's a spot where we have both support and resistance. So that might be our first level. So anywhere in here might be a little bit of a chop fest. Might be a little tough. I would say that would probably be our chop zone. We first need to get above that level.
So if you put targets, you'd say 41.45 would be our first resistance up top, and then maybe 41.50. We talked about that. That's where the 89 is.
Yeah.
Within that key level up top, you talked about support resistance even higher, 41.65, 70 area. So there's a few different areas that each one of those also becomes a great spot to see the market turn and head short. So as much as you're testing it to see if it would break through, well, if it turns around and it looks like a good retracement to a downtrend, then it probably is.
Yep. And we got some room to move up. The problem is getting there. It might be a chop fest getting there to where if it moves down, we really don't have as much to worry about going short, as we do going long. Because once we get below these levels here, now here's a level you have drawn. Here's a level down here you have drawn, right? So the levels down here are a lot bigger to where there's a lot more room for us to go down. The levels above us could be kind of choppy getting up there. Yeah, I don't necessarily know we're gonna have this straight line up when we have all this area of contention that we may have tough time getting through, where there's been some orders stacking in.
So underlying theme, if you will, what Rob's kind of pointing out here, when the market's really shaky, when you get these areas that it doesn't really know what it wants to do, it's likely to do that again later in time. And then on the other side of that coin, when you see these long runs and not a lot of resistance in the middle of it, it's likely to do that again in the same period. So that's why he points out if we get below this shakiness where the boxes are, then we're likely to do what we did last time and kind of just float through that whole area to the next level of resistance, which is way down low. So that's the reason he says if we break through that, it might keep running. It's because of how easily we ran up before. Oftentimes those zones are the same way when we come back through it, just kind of float right back down through, level to level, if you will. So the two levels here will be up top all the way to the next one, and that's why he says there's so much headroom on the bottom side. That's why a lot of people hear the term like look to your left, see what happened. It's so valuable. I mean, there's traders who come back like that's the best thing I ever learned, and you think like it's so simple. What do you mean that's the best thing? And it's really just recognizing like what happened here before is likely to repeat. Maybe not exactly the same, but where we see commotion is likely to be more commotion. And if we just run through an area with not much resistance, we're kind of likely to do that again.
Yeah. So we've got a lot of chop on the way up. Where we don't have as much chop on the way down. So cool. 5 minute.
And we have 5 minutes. Perfect.
Yep.
So my 5 minute, I really like if y'all are willing to draw the same channel, one that appeared overnight. I'll shrink my charts just a little bit.
Yep, but I have almost the exact same channel too. That's
I bet.
Cool.
I mean, there's so many points of confluence, but starting at the top of the move, one, and then your second click could be through those or even through the second one up top, whichever you felt. They line up pretty well. And then the third one using the bottom of the channel at the bottom. Those are the 3 clicks you'd have to make to have the exact same channel. Again, dropping your anchor, dropping the angle of the line is number 2, and then number 3, you drop this bottom line parallel to the top one. So using your trend channel tool, if you will, out of your NinjaTrader or Control 2. I forget what it's called. I'm so used to hitting Control 2, but your trend channel tool, you could draw the same one. Now, why would you want to do that? Because it gives you an anticipation of what could happen over time, meaning once you have the same angle on both sides of the market, especially once you get this last bottom here, then that pattern is likely to continue into the future. And you think, well, it's likely to bounce off the tops and off the bottom. Now, nothing is exact. I have to allow the market to bend around it, but it gives me a very strong tendency to look at and say, that's kind of where we're at. And right now, kind of where we're at is near the top where it's turned around a few times. So another place that's not unlikely to see it push down from. The reason I drew this line is because that's the point at which you could have this channel drawn really undeniably. I guess it doesn't matter. I took a couple trades last night, and one of them was just short and filling before the bottom there, and I like the channel, bottom line, without going too far into my own trading. I like the channel. I like how it can be repeatable into the future. I know channels, a lot of times people feel like it's a magic stick that somebody puts on the market. And they're like, if you don't have Rob's channel, you better go copy it or something like that. And it shouldn't feel like that.
No.
Because it's never going to mean anything unless you trust your own channel. And you're not going to trust it until you've done it 1,000 times and seen it happen.
Now, what about with opening bell? And if the emotion from opening bell kind of blows out the channel a little bit, should we still think, okay, the channel, we're going up. It went outside the channel.
It's hard for me to discount any channel at opening bell because of how much volume we hit is likely to go outside of it. So because I already know I trust this channel, what I'd really look for, if we break out of opening bell, sure, that tells me that this resistance has been released. So there's two different things. If I really think we're going long, I want to see us pull back and show a turnaround where once was resistance is now support, and then see it push up, and then I'm a little more convinced. If, however, we wick out of that channel really far, but we end up closing back inside of it, that is very common that the channel will pick back up where it was before, pushing down off the resistance and head back in. So to answer your question, if the emotion pushes us out, but we kind of just return right back inside and start closing inside, very likely that the channel will pick back up. If we can close outside of that channel and I end up seeing the market use that area as support, then I'm a little more convinced that it might want to break, but I have to remember we're in a long-term downtrend.
Yeah.
So I can't get too sold on has to go up. I'm really convinced. I mean, we're in a very good spot to see it down from where we're at. So
yeah, a turnaround. Yep.
Especially seeing us wick right off this channel. Should I have jumped in? Nah.
Yeah.
I laugh because you will have that temptation. It tells you a lot of times your levels are in the right place. When you see the market wick off of it within a quarter tick or so, it's tempting, but a lot of times it tells you orders have been built up right at your level, so it's a good sign. So what are we thinking? 30 seconds left. Let's go find the 30-second box.
30-second chart.
Nice little market we got here today.
And make sure you're on your right account if you're doing the opening range trade with us. You have the right account and the right ATM strategy set.
I think back, I remember, we're going in 30-second range. I remember saying, I don't want to talk too much about my own trading. I filled both those trades. I feel guilty sometimes being like, look, you could have used your channel and filled 2 trades. I don't know why, I do.
All right.
So just full transparency. I wasn't trying to hide trades. I stopped out. I actually filled both my trades overnight, just kind of not the time or place, if you will. I talked about them this morning. I try not to harp on my own trading too much. So we're getting this range. I need to choose the right strategy.
I think we can put it in at the top. Going long. That one's pretty much there. Okay. And I missed the one out the bottom. Oh, we didn't get in it yet. So we're going to sell at the bottom and we're going to go long out the top.
Now, I've been wondering, excuse me, there might be a little bit of a caveat with volume or order flow or something of the sort. I've heard some traders mention that, but overall, is there a time frame? Like, should we have the 30-second and not trade it until a minute has passed? Because other people have to acknowledge that the range is there, or as soon as the 30-second range hits, you better have your trade set or you're going to miss it type situation.
I think as soon as the 30-second hits, because of those times it just takes off out of that 30-second range and never looks back.
That was something I was thinking about.
Yeah. So you're either talking about it going outside the range and retesting, right? The range, because what if it goes outside on that first move? Then we're in short. So here we go.
Yeah, man. It's been time. I'm just saying, maybe that first 30 seconds after the range, that's what I'm kind of curious of. Because I know there's other traders who trade like a a 15-minute opening range, I believe.
10 minute.
10-minute. Okay.
Yeah,
Yeah, I've heard different time frames to where they really want to solidify the opening range.
I think it's what fits your personality. You can do it any way you want to, as long as you have a pattern that you can repeat.
Yep. First pay line hit.
Target. Yeah.
So that's a good spot.
Yeah, we had one chop and then pay line.
Yep. And I didn't even get chopped on mine. I was between I was between it the whole time.
Yeah, that's the other thing too. When it's small like that, should you just keep your stop above the other side? And that's a question I have sometimes, but I don't like to risk that much in it. So,
so now we just hit our second pay line of, I have +4, +8, and I've moved my stop down. So I just hit my third at +12. Now we're going to get the runner in. So let's go ahead and move our fill out of the way. So we're going to try and get into a runner here.
Same.
Boy, another nice opening range trade today.
Very clean opening range again, right? I'm about to move my stop up as well. I love it when that
happens. This is very unusual. 5 in a row. Because I don't count yesterday. I didn't even look at the charts yesterday, but Tuesday, Wednesday, Thursday, and Friday last week, very little chop. And today,
very little chop. Yep. Today for me was no chop. So
you've already made 15.
I should have moved that one down.
I gotta follow these key levels.
Saying that. Oh well.
Well, make it repeatable, Randy. So instead of should have, decide what your plan is ahead of time.
Well,
so
that was
what you should have done.
I know it was my plan, and so I was just talking and not paying attention. That was the plan.
Perfect. So I'm going to put a trailing stop on. I'm going to keep following through the key levels. We've already hit the bottom of the channel now, so squeezing it, not a bad idea in my mind, even if I took a few points. So I am going to leave it. I'm going to leave it above the 41.30 mark, but I'm going to put on a trailing stop.
Yeah, and I'll put the opening range into chat here. Looks like we have, confirm this with me, Randy, 41.41 on the top. And on the bottom, hold on here.
I'm at 41.25 on the top.
Yeah, you're right. 41.25 on the top. And then on the bottom, we have
37.5.
We have, 41.37.5. So I'll put that in the chat for folks. And
I kind of regret not trading that this morning.
I know.
I wanted to. I knew it was a good spot, and I mean, I'm not going to make excuses. Got caught up here. All right.
Yeah,
it's one of the mornings that did what we thought it would do. Sometimes I'm hesitant.
Yeah,
when it's
going with the trend. Yeah, I mean, that was why I was thinking, if it goes out the bottom and it starts hitting pay lines, I want to extend my lower one and try to find a spot to get in again to capitalize on it. But
yeah, it's not even that we were going with the trend. It's that we had a trend and literally wicked a channel that hasn't been moved since 10 o'clock last night to the quarter tick of my channel. Mm-hmm. And again, not my channel, the one that was made. I talked at the beginning of the session how you could have drawn it. But seeing it come back, turn around right at that level to push down that's a very good sign that it wants to go down. That's what should happen, right? That's why I drew the channel. If I'm following the channel, it says, well, if the market's doing what it kept doing or was doing, then it'll come back and hit that and push down. And literally to a T did that. So as much as a lot of people are probably looking and saying, whoa, this is a giant OB candle. I wonder what the news event is. In my mind, it's like, why? This is exactly what was supposed to happen.
Yep. The news was it was supposed to happen. That's the news.
It went from the top to the bottom. That's the expectation. Now I'm going to kind of take a step back, say what's going to happen. But if you asked me before OB what I thought would happen, it's, well, we're at the top of the channel. We might go to the bottom. Yeah, there's key levels in between. We might have said we might slow down, but the anticipation says that's what we're going to cover as a range. So that green candle, that's one thing to think about. A lot of people think, wow, well, everybody, it has to go back up now. In my mind, that's a lot of people filling on trades. And like Randy says, there's people stacking into this trade off the bottom of key levels. So I'm not interested in trading this long, not even a little bit, because of how many people I know got on this move in the beginning. There's a lot of people trying to stack in and hammer down on this trend. I don't want to jump in their way.
Yeah, and we crossed the Bollinger on the 5 minute, so that's a really good sign. We just touched the top of it, right at the 89, dropped like a rock. So yeah, I kind of want to see it come back up to the place that it broke, that flat there where we had where you were talking about before opening bell, around 24 area, or even back up to the 20, the 21 and the 10 are stacked. So that would be a good retracement too. But it may not go that far. We may have already seen it. It looks like momentum.
It seems to have left the launch pad, if you will, in this case, to where it's set up perfectly, ran away. I mean, as much as it does pull back, I'll be interested in the short trend, but
yeah, this is the bottle rocket you threw up in the air and it turned around and it's coming back at you.
So, folks, tonight for our evening session, Dean will be there. I believe Robin will. Ladine's still under the weather. She's getting better, but she's still under the weather, so I don't think she'll make it. So anybody else who wants to come in and say hi, I will not be there, but I will not be there tonight or tomorrow. But feel free to come out and have some trades reviewed. We won't take the opening range trade. I know some people will be doing that, but that's an hour earlier. So it's from 7 p.m. to 9 p.m. Tonight and tomorrow night for the evening session. And of course, we will continue to trade after our YouTube stream is over. We're going to kind of let this trade go to fruition, and then we'll be looking for another trade probably that comes that follows our set of rules, those rules that you see on Travis's screen. So Travis, what might we be looking for now if we didn't do the opening range trade? What would we kind of be looking for now?
Well, it just so happens I have a handy dandy set of rules over here.
Perfect.
But I want to see a trend, I want to see a retracement, and I want some sort of an entry point in that trend and retracement. So right now our trend is pretty down. Our retracement, I mean, to trust this trend, really, as long as we're under the 289, we're good. So this could retrace a long way, and I'd still be interested as far as a down trend. So we could look at our last move and say, really, between 382 and 618 of that move is a pretty big range. If we turn around anywhere in that box, I like the idea of short.
Yeah.
Now, my head...
Clear a turnaround, right? Clear a turnaround for our stop. I mean, I don't think we need to necessarily clear 4140 or 4145 here. That big candle, it's going to be pretty tough. But when we get a turnaround, so we get a double bar, we get a diamond, now we can go ahead and look to clear that turnaround with our stop.
Agreed. So perfect world, we see a turnaround somewhere up there. Then I start thinking, okay, where can my stop be? Look at my headroom in the trade. One thought is that because this channel has been used so many times as support, if it retraces far enough, I'd like to be able to fill without breaking that channel. The other side of that coin, we are in a darn good trend, if you will. So if I needed to break it by a point or two and I had a good retracement, I wouldn't be against that either. It's just kind of weighing in the trade, seeing which strategy fits the best there. I do want to attempt to fill without breaking through it, but the further we go under it and then come back to retest really gives me more confidence that we want to stay down.
Yep. And I've moved my stop now to just above the 10. So I still get a 10-point gain on this trade. So if the price does decide to rocket back up, I'll still make 10 points on this final contract. So I'm kind of about where you are, Travis.
Yeah, I would make 10 and a quarter, so I'm better than Rob.
Yeah, you got it.
There we go. Well, I stacked in on the momentum on the 32nd, so we'll see how that works.
There you go. And folks, listen, if you say, hey, Rob, man, you're up 30 points right now on your final contract, I'm pretty happy with that. I'm just going to take my 30. I would never tell somebody to say, no, you got to let that run. If that's what your comfort level is, then go ahead and take that 30 points. Now, your trailing stop's going to already start following. Once you hit 30, then you lock in 20, correct?
I changed it this time. So because we were already up, it's 20 and 40 this time instead of, a lot of times I use 15 and 30. So not this time, I use 20 and 40, but I can still trail that myself and not cancel it. So what I'm doing now is moving it to that last key level. See how that's where we had support?
Yep.
Moved it just above that area at 22. So now.
Just above that wick too.
Right? About 15 points if it ran down from here. We could even make it 27.50. 2250 to make it exact. Doesn't really matter, but just kind of looking at that was the last place we broke, so it's likely to come back, retrace somewhere under that, and keep going if this emotional down holds. Now I have to remember I can always get back in, so I don't want to get so caught up on 100 points that when it comes back I say, oh, it has to go down, oh, it has to keep going, oh, it's going to turn around, and then I realize, wait, I stopped out -1 and I was up 30 points. And if that hasn't happened to you, it will one day. It like, I can almost guarantee if you start practicing,
and you'll be like,
trailing,
where did the points go? Where did all my points go?
Over the weekend, and I was thinking, okay, so do I want to really risk? How much do I want to risk? So like you said, getting back in.
Yeah.
Think about how much risk you have in that trade now if it comes back and hits your stop. I mean, the risk of not points that you're not going to make, right? Not the points. You're going to be positive, but I mean, you're risking points that could be in the bank, right? So reduce your risk in that, and then you can get back in. And if it does turn around, you've been able to bank those points.
The further this runs emotionally, the more likely I am to just squeeze it and allow myself to get back in at a later time because of the potential for it to rebound back. So a few common strategies there lie. A lot of people like to just choose a distance and try and follow the market at that distance. I'm a little weary with that because it's hard to choose a standard distance, if you will, with different sizes of candles. So I like to either choose the last key level and move my stop behind it, or choose the last candle and just keep following. Like in this case, the red candle painting is the 945, so I'll put my stop above the 940 candle. And once this one closes, say it closed right there, I might move it and just put it above that candle, so that each time it continues. What you'll see in a lot of these moves is that the candle does not break the high of the last candle. So it's very, very common in an emotionally down move to see that the bodies are literally about in order and the wicks don't cross each other. And it's not that that will never happen, but a lot of times that emotional move will keep going until one crosses through, and then maybe it stops, maybe it retraces. But overall, that's the time I'm going to get out, is the time that we have that first pullback beyond the last candle that kind of puts a halt in the emotional down. Right now we have a very strong emotional down, so I don't want to just throw my gain on and take my points yet because we're going. But if I did get really scared, I have no problem squeezing my stop and saying, I'll take whatever it is. Again, my goal is to extend my break even from a 2-point stop. We have satisfied that and then some. So no matter what happens, I'm not upset. The only way I'd get upset with this trade is if I did what I just talked about, said, oh no, it has to keep going down. As it comes up, I say it has to keep going down. Move my stop all the way out of the way and stop out even. That would be my regret in this trade. As long as I get more than 5 or 7 points, I'm good. And it would be hard for me to give up all of them. So we'll stay right above the channel now and just keep kind of floating it on the way down.
Yeah, and for folks that, wonder why we're doing this opening range trade, well, for me personally I could never seem to figure out how to get in these trades that move out of opening bell and don't pull back at all, or they don't give me a spot to get in. Got very frustrated with that. So we started scouring the internet. We started talking with other traders, and Randy ran across this opening range trade and we started looking at it. And so this is what we've been working on at opening bell to try and find out how can we catch the momentum out of opening bell when the price moves, especially recently over the last, 6 months to a year, it moves 30, 40, 50 points. How can we get on that? So this opening range trade has really opened our eyes.
Oh yeah.
And how we can get on that. And
it was one of those things. We were I was listening to a podcast from Crudeli. Mm-hmm. And actually I was in the car traveling and I wasn't even able to see it, because I was driving, so I could hear it going on. And he was talking to a trader that we know who goes by the name of Pax as his handle. And I pretty much ignored it. And then when I got back from that vacation, I went and watched it, and I'm going, like you said, it's like, does this make any sense? This doesn't make any sense to me. And I started, I guess it was several months before I even thought about trying to practice it. And then I thought, well, and he did another, he does his own podcast and kind of goes, he has a Sunday night session about once once a quarter or something where he talks to traders and other people interested in what he's doing.
Mm-hmm.
And he went through the details of it. I said, well, I wonder if I can construct a trade around this, where that's the origination of the 4-contract trade that I am using, and started making some rules around it and listening to what he said and kind of getting into the, me, into the hairs on the bark beetle, as he likes to put it. But it started working, in Sim. I go, wow, there's something to this. And, that's how the ball got rolling. And like you said, it's amazing. This is the longest period I've ever seen it do this with as little chop as it's done.
Yeah.
But
it's been a wonderful
it has
trade.
its cycles. Yeah, it has its cycles. You gotta, the key to it is taking advantage of these, but being on the lookout for those chop days and not over trading on those days. Those are the days that you'll give it all back if you're not careful.
Yeah, because you're looking for that big run.
Yeah, you're going, oh, it's got to run again. It's got to do it. This time it's going to go.
Yeah.
And I'm thinking, and I'm talking about the voices in my head that's going on, when I've tested this. And going, yeah, when you hear those voices, don't listen. Run away.
Yep. So I know quite some of us kind of rejected it at first. I know Travis at first kind of, that's not in my zone. That's not what I do well.
Well, I did too.
I think we all did a little bit because it seems so like hope and a prayer type of deal. But once you see the methodology behind it, and you understand how the momentum comes out of that 30-second opening range where all the algorithms get turned on, then you start to realize that, okay, now this starts to make a little more sense to me. So this is kind of what we're working on at FNL, folks. It's going to be a work in progress, but hopefully we'll have something that's, that is repeatable and that people can, start to implement themselves.
Yeah. Well, I got 2 levels out of that stack in, and then it came back and stopped it out for a scratch. So yeah, that's not bad.
Yeah, right. Yeah, right now I'm up 4 on one contract, 8 on another, 12 on another. I'm in my final contract, so it's up 25 points right now, 26 points. So we're just gonna kind of hang out and let this go to fruition. So I will post on our Facebook page again the opening range trade. I've posted it a couple days now, and it's been really nice to see see this trade working out for folks.
So one of the biggest things with opening range, you're right, I was hesitant with it. And part of that is that everything else I've ever learned, I've been able to really stack on top of a foundation of a trend, a retracement, clearing my stop, and just like whether it was the Bollingers or a 10 EMA or the RSI, I mean, it's still balanced in with everything I already knew. When it comes to the opening range, it's like, well, don't even think about the trend. Don't even think about your retracement. Literally just look at that box and just put the trade on. And it just seems so out there. It's like, it is repeatable, but it does not match anything that I had done for the first few years of trading. And then it's like, well, I guess we'll go for it. And like you're saying, I am excited about it. I like the opening range, but to anybody who might be hesitant, I was right there with you. I wanted nothing to do with it at first. It was like, okay, cool. I'm going to keep trading because I like my zone, and that's not it.
Yeah, exactly.
And it's not a
scary
approach, but the reason I say that is if you've never been there, it's really easy to find a new indicator, a shiny thing, if you will. Oh, this is what I've needed in my trading. And 3 weeks later, you realize not only is it not what I needed, I forgot how I used to trade. I based all of my trading around this psych line or all of my trading around this MACD, and I forgot how to look for a trend. And I'm not hating on any given indicator. I'm just saying, like, know what you know and prove it to yourself so that you do have a foundation. I think all too often I hear how traders try and learn too much too quickly and end up getting spun out. And I've seen that myself in a few traders. And I think sometimes it seems monotonous to really build a foundation with a trend and a retracement and know where you clear your stop. But overall, it gives you something to lean back on when you get confused in the future.
Yeah.
Maybe your strategy isn't working today. You say, well, I know this works. I know that blue diamond with the 50% retracement, a clear stop, and a downtrend will work. So I'll just look for that for a little bit. And here we go. We retested the channel on the bottom side. Randy talked about stacking in. If I were to stack in, the place would be Where there was support, there is now resistance. That's why my stop stayed above that area. This market came right back to where it should have and then kept pushing down. So again, I'm not even a little bit interested in going long right now. Just too much telling me the emotion's down and we're stacking off. So oftentimes, y'all talked earlier off EMAs, whether it's an EMA or a horizontal level. See how we came back to that one too. Oftentimes, either one can be used as that stack endpoint. So seeing how we're stair-stepping through these levels and retesting them perfectly is a huge sign that we want to keep pushing down. If it were the other way and every time we went down, we were hitting these levels perfectly and then just running through all the key levels on the top side, you might say the other way around. But on our way down, we're not respecting these levels as much. We're respecting them when we come back to retest that to push down again. Now, that's something that took me a long time to recognize in trading. Now, when I see it, I don't fight that trend. Not even a chance. It just tells me that not only were people on this morning when we went from the 200 all the way to the bottom and then the 89 and pushed down, literally 2 perfect turnarounds to start stacking in. And then this morning we came exactly to the top of the channel that we all drew together at the beginning of session. I can back up just for a second and show literally it's not my channel. It is as accurate as I can get using the tops from the beginning of this move. It's the exact same channel I drew at 8:30 last night for what it's worth and traded off last night. Haven't adjusted it, haven't touched it one bit. First point being at 5:55, the second one after that, the third one on the bottom. So we already know at 9:35, if you will. So you already know that's the temptation that we want to follow. And it came literally to the quarter tick of where I had it drawn and then pushed down. So that tells me that everybody who wanted that move probably got on it. Probably some bigger players there. And as it headed down, again, seeing it break through the key levels, come back and retest, you can hear what Randy's trying to take advantage of. I like to as well at times in a good trend, because what ends up happening now, if you don't scale out of trades and you want to close your ears, you're welcome to. I'm going to talk a little bit sideways, but what ends up happening when you're far enough ahead in a trade is that, let's say, here, I'm going to zoom out and just show an example real quick. Let's say in my OB trade, I wanted to scale in. Well, there's a point at which I can move my stop out of the way. And let's say my new scale in point, we'll leave my stop above the last key level. So as an example here, we're going to scale in one contract down at this next channel, okay? I'll actually do it. Let's see if we can get in. Just as an example, I'm not saying follow me, but in a perfect world, we're going to scale in. And what you're going to realize is the ability to have an order pickup. Okay, so what you see, I had to move my stop out of the way, but you see where my stops are and where my entry is. We split my entry and added to my position in a way that I can stay ahead of my entry point. So no matter what happens, I added to my trade, and the worst that can happen is I stop out positive 10 points on 2 contracts.
That is key. That is so key. At learning how to do that. That's increasing your profits without increasing your risk.
Right.
Yeah. Well said.
And that's something that, because of the ability to see how I stacked in off the key level, that's what I try and point out that a lot of people are doing at these key levels. So when I see that we retested the last box literally perfectly and then pushed way down, and then we came back to the channel perfectly and then pushed way down, that tells me that people are doing the same thing. They're stacking in, they're taking fills from however far it goes, but they are still building into this trade as momentum. I don't want to fight those people. There's a good chance they have, I don't want to say more money than me. I'm not talking bad about myself, but there's some pretty big players at work sometimes, and it can just be everyone. It doesn't have to be one big guy as much as it's the flood of people seeing that we're pushing down and retesting the key levels on the way down. So again, the point I was trying to make is that I could scale in at the bottom of this channel where it's likely to push down in a way that the worst that can happen to me is I stop out positive. But now I'm leveraged at 2 contracts per point instead of just 1. And you can scale up that theory to say maybe you had 2 on and another 2, so now you're at 4, or however you want to do it. But bottom line, knowing that my entry point is still way behind my stops gives me a lot of freedom in this trade. I have to be careful not to give it all back, but at the same time, it gives me an advantage that you don't have until the market runs from your original entry. So the point I want to make, if you see a key level that gets hit, the market runs way away from it and then starts respecting levels. This morning's a very good case of that, where it's like a lot of people who got on up top doing exactly what it should do, now have a lot of freedom to play with in the direction of this momentum, right? So any key level now becomes a spot that it could just take off from, because a lot of people are just stacking in wherever they see a key level. Just let's add a little here and a little there, knowing that if it pushes down, great. And if it comes back, still great. They'll stop out and think about a place to get back in if they want to. Again, everybody will approach this market a little differently. I'm not going to generalize what everyone does as much as just show that you can scale in and keep your stops so far ahead of your entry that you add to your trade, and there is added risk, but it's not the same as being behind in a trade and adding on contracts when you're losing. And
like dollar cost averaging, basically. You're not dollar cost averaging here.
Bingo. You're not doing a DCA. You're not panicked. You're not using it as a parachute to say, uh-oh, I'm about to lose. Let me not lose this trade. And there's so many traders that say, stop adding to losers. Stop adding to losers. You know what they don't mention? That you can scale in and add to winners and stay ahead of your entry point. And that's their own strategy. So it's probably not easy to mention in a half a second. But they'll stress all the time, don't be adding back here when the trade's going against you and you say, well, it has to turn around. Huge difference in trading. So people are much less open about what they do on the gain side. But a lot of those traders who stress, don't add to losers, don't add to losers, are the same type, like respectfully Anthony Crudele, who tells you he likes to click buttons. Now, how can somebody who likes to click buttons not add to losers? Well, it tells you that he likes to click buttons when he's ahead in a trade and see what he can do with it.
So let's talk a little bit now, Travis. Maybe even go to a different account. Sure. So you could possibly take a trade on a turnaround here. We've got some key levels here that we're hitting. And for people that may not be in a opening range trade, and we're going to kind of end with this, maybe let's look at what we would be looking for right now. We talked about it a little earlier, but let's end with what we would be looking for right now in a trade that wasn't an opening range trade that follows our set of rules.
Well, a turnaround at any point in time. So I'm looking for, with the trend, we have that 30 to 70 retracement could be measured off the last move. So if you wanted to be very specific, you could draw your fib levels here. And I know I'm kind of interrupting myself, but I wanted to mention how we're using that same level. See how we're wicking again off of it? That's the point I was making earlier, where a lot of people are stacking in. So anyways, if I'm looking for a trend, or I'm looking for a trade that follows a foundational rule set, I'm looking for a trend, we have it, a retracement, we're starting to get it. Now I'm looking for a turnaround anywhere in that retracement. My Goldilocks zone, 30 to 70% roughly. So we'll just go roughly 30, 70%. So here's my big old box that says, if we turn around in this area, I like the trade. Now, if I'm a little under that box, rules say that if I can fill without making a new low, we're okay. So what does that look like? Well, a diamond at any point in time, if we get an FNL diamond or a 1, 2, 3 turnaround, then could be a very plausible trade there. So in this case, if this wicks up, the next candle paints red, we will see a diamond. Also, if we had a double bar from a key level, so a very clean turnaround either at the bottom of the channel or up at this level, could be qualified as a key level. So those are my two places to say if it turns around right at the channel or right at this level, I would accept a double bar turnaround. Now, to dig into the details a little bit, a 1, 2, 3 turnaround is a 3 candle pattern. A double bar is a 2 candle pattern. So in the 1, 2, 3 turnaround, I have 10 to 15 minutes worth of time. On the 2 candle or the double bar, I only have 5 to 10 minutes. So it's a little bit weaker pattern to look at a double bar, which is why I want to stress so much lining it up with a key level. I actually like this. Stop would have to be almost 23. My entry I like off the bottom of the channel at 16, 10, 7, 13. Don't even have a 10, 7. I like this as an entry point almost now because we've had a double bar off the key level. So at any point, if you clear your stop, you're okay. If you're waiting on a turnaround, could be a little cleaner, but I might have just missed that trade. It's okay if so. I shouldn't have hesitated. Having it come back to the channel, the turnaround, and clear your stop is the goal, with the headroom to fill on the bottom side. So if this gets picked up, I do want to change it to a 10-7 instead of a 12-8. I like my headroom a little better because from 07 we'll fill, or from 17 we'll fill at 07. So that gives me the headroom to fill on this trade, knowing that we're about 30%. So If it comes back, my entry point. So one thought here, if I'm asking for an entry, that just like kissed my order, but if I'm asking for an entry above the 10 in the bottom of the channel, then I'm asking for a lot out of this trade. Meaning, even though the perfect position might be up at that last key level up top, I'm too likely to miss the trade that it's not worth leaving my order there. I hate that I still missed this. It came back and kissed my order. Oh well.
Mine too.
So
Yeah.
the point being, I needed my order under the 10 and the side of the channel because that's what it's trying to turn off of. And I needed to do that with a clear stop, which is why I started to lean on a bigger strategy. You could look at our average candle size and see that we're all the way up at 7. So a 12-8, 10-7, perfect. I regret missing that trade. It's one of those that in my mind, if I wasn't on session, I'd for sure be in this right now. And I really feel like that, but I missed it by a quarter point. So what can you say when you miss it by a point? It comes back to get you and goes without you. It's like within a point of making the right decision. The biggest point I want to make is that I was willing to get in early because we had green up, red down, showing a turnaround. Now, it's not a perfectly clean double bar, meaning it doesn't necessarily look like this up here where you have them right side by side. They're staggered. But seeing as they're staggered, it showed me a lot of resistance off the last key level, closed red. And in that case, again, if I want this trade, my entry is between right there, that 10 and channel, because that's what's holding it down. So that's what it was turning around off of. So asking for an order above that would be a pretty big ask. Now, at this point in time, I have to ask myself, has the move already happened? That's tough. We're kind of in between. Because a lot of times I ask, how long do I leave that limit order sitting, right? Barely missed me again. Should I put it under the channel? I still don't mind it. I mean, our diamond hasn't even closed. We're still halfway through painting it. So I can't give up on this trade yet. We haven't made a new low. But two different rules. If I'm leaving this limit order, do I still leave it? These are my own rules, not necessarily an FNL representation, but my own rules on whether I keep this limit order are A, does my stop still clear? So I look back, in this case, I have to clear that wick. So if I'm trying to get in on this candle, I have to clear the turnaround to get in on this trade. If I can't, no trade. B, has the move already happened? Meaning, if I look at this move, we've already gone back to make a new lower low, and then we start to head back up. Do I still want a limit order sitting there? My answer is no. I think people have to find that out for themselves. But to me, if the move has already happened, I don't want to leave it because now all these buyers could have jumped back on. They're pushing it back up. Long story short, I want another turnaround to confirm that that's what we're doing. If I think the move has already made a new lower low, or I see that the move has already made a new lower low. So in this case, it's kind of close, but we'll leave our order there for a minute. Hasn't made a new low. We're still painting our diamond candle off of the key level, so no reason to panic as long as I can fill my trade without making a new low.
Excellent. Excellent. All right, folks. So we're going to end the YouTube live stream, but of course we'll stay on trading with members. So now you guys have got a good little synopsis on a turnaround here after a lower low in what is definitely a downtrend. So thanks, Travis. Great job today. And we'll be back on live YouTube at some point this week. We kind of want to make it a mystery when we're going to be on. So if you're out there in YouTube and listening, be sure you subscribe, mash that like button, and get alerts for when we go live. And you don't know when we're going to go live, but so get an email from us, an alert for when we go live. So again, thanks a lot, Travis. Great job this morning. Randy,
yeah, thank
too.
you. Congrats
Thanks
to all.
Yep. Good job, everybody. So